Maverick traders. Welcome out to your market roundup for January 28th. Corey here with you. We're going to take a look at meaningful news in the market. Today was a bounce back day, and no big surprise, the things that fell the hardest kind of bounced back the most. They didn't recover all of their losses, but certainly bounced back. We'll talk about bullish, bearish, and neutral setups and try to highlight the very best ones.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we look at the markets here, certainly a bounce back day. You can see the Dow up slightly, and it's interesting, the Dow was the only thing up yesterday. It's slightly higher. S&P up just under 1%, NASDAQ up 2%, so they recovered some of yesterday's losses. IWM flat, oil and gold, again, everything bounced back. Is this a dead cat bounce? Is this a full recovery? We shall see, but I think that's the news of the day, is that there's a recovery, commodities bounced, everything bounced. Advanced decline line, about 50-50, so half of stocks going up, half of stocks going down, and the 50-period moving average right at the 50-50. So we're in this point of equilibrium. Now, the buyers and the sellers, they're in a battle, and they're battling it out, but here's the way I would look at it, and we referenced this yesterday. So you had the gap down, huge gap down. Here's the prior close, here's the next open. You could see that there was some buying because we rallied throughout the day, and some more buying today, which is not a real surprise. As I drew it up yesterday, I said we bounce for a day or two and then sell off again. Here, I think we bounced for the first day, and was it, let me give the markets credit though, was it a bigger bounce than I would have anticipated? Yes. So if nothing else, when you see the size of the bounce back, that's important, it's impactful. Did it recover all of the losses in the NASDAQ? No, it did not. Not even all that close. I mean, you've got the gap fill is all the way up there at 530, so we're still a ways off of that. But when we look at this from the standpoint of where it's going next, we at least had a recovery, a bounce back. Now, I think nothing today really changes my opinion on markets, but I would say this. The bounce back today was strong enough that the idea that we're going to stay in a neutral, kind of just wishy-washy state here for the next couple of weeks certainly increases that probability. I do not think, I would kind of rate it this way. The sideways range increased in probability. That's very possible. I still think the rollover in a lower swing high, lower swing low dynamic, that's very possible. What I think is least likely is just a full-fledged recovery up above these highs. So I would rate them as 1, 2, and 3 in their probability of what transpires next. IWM, this is still, I mean, you look at it and we're failing against the 50-period moving average potentially. Further selling, further declines seem quite possible. Maybe one would even say quite probable. So I don't think we're out of the woods yet, but it literally was kind of a bounce back of everything that sold off. Nvidia got hit the hardest. It bounced back the most. Microsoft got hit. Meta got hit. There was just bounce back across the board. And then on the flip side of that, everything that was seemingly green yesterday. I mean, you had green in some of these financial stocks, and they're red today. You had a lot of green all throughout, and they're all red today. So if today was anything, it's just a polar opposite to what we saw yesterday. I'm not ready to declare this as, hey, it's just recovering from here, but a sideways move here, certainly possible, and no doubt about it. So let's look at some possibilities. The thing I like about Meta is it's different than all the others in that Yesterday we gapped down like so many other stocks, but we finished higher. That tells you all you need to know. If this pulls back, it consolidates. They want to buy this for the next run. So if it pulls back or goes sideways, this is one that you've got to look at as a buying opportunity. It is at new highs. The S&P 500 is not at new highs. It is at new highs. The QQQ Nasdaq 100 is not at new highs. So you have all the elements, relative strength, a nice ascending triangle it broke out of. This stock you want to continue to look to buy more than sell or do anything else. Same type of idea. Look at Walmart. They sold off the market yesterday. Walmart actually gapped higher and proceeded to rally higher throughout the day. Solid breakout on increased volume, and I would anticipate a push up there towards $100 per share, and quite possibly higher than that is in the works. On the bearish side, EA, I don't remember if we looked at this chart yesterday for sure, but certainly lower base down at the lows. So low basing pattern after a gap down, not even enough strength to kind of recover in this rally. I'd continue to look at EA as a mild downward mover going forward, and FCX sold off yesterday, sold off even harder today, even with the market bouncing back. FCX has got to be one of my favorite short ideas right here, right now for a downside trade. So the market's bounced, but I would put this in the dead cat bounce territory. The dead cat bounce concept, and it's kind of an ugly concept, but the idea that as it hits the ground, it's going to bounce up, but there is no recovery in the works. That seems most likely. Now, we do have the Fed meeting tomorrow. We've got Apple, Caterpillar, Facebook, Meta, Microsoft, Tesla, ExxonMobil. We've got plenty of companies reporting earnings this week, so plenty that can move the markets and keep things volatile. I would anticipate a lower swing high, lower swing low pattern is developing in the markets. And until proven otherwise, I would put the sideways / bearish trend as most likely. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.